Hello, friends. Today we're taking a look at Chipotle Mexican Grill, ticker symbol CMG. This is a great company that has been growing really in amazing numbers. We're going to be looking at the last 5 year performance of the stock. We'll look at what Chipotle is about in case you don't know what it is. We'll look at the last earnings report, the performance of the stock, all the fundamentals in the last 10 years, and then we'll try to find a fair value for Chipotle Mexican Grill. Welcome to Money Talks with Martin Reyes, where we learn to take care of our money and find great companies at great prices. Chipotle is a company that I've been looking at buying for a long time, but every time that I do the analysis, from my perspective, it is a little overvalued. In the last 5 days, it has grown. It has gone up about 1.8%. In the last month, it's up 8.7%. In the last year, is going up. Oh, am I going to have an internet issue? Come on. No. There we go. 72% in the last year. That is a crazy growth in the last 5 years, 315%. Now you know why anybody would love to own Chipotle. And one of the things that Chipotle, I believe they just announced a 50-1 split, which is going to make it even more accessible instead of having to buy. So the idea is that a lot of retailer investors are going to be able to own more of them. They're going to be able to trade them a little bit more, and also when it comes to buying what's it called, options, it's going to make it a little more affordable when it comes to that. So Chipotle is a really great company to buy. However, when you look at the expected growth of the stock itself, or the target price for the next 12 months, the average analyst is thinking that it's going to be, the price is going to be somewhere around $2,600, which will be at almost 11% down from the price where it is right now. They're planning to report next week on April 24th. And right now it's trading at a crazy 66 times earnings. And that has to do a lot with the growth. We'll be talking about that. For those of you that don't know who Chipotle is, it's a Mexican food restaurant that focuses on really fresh food. I really encourage you to go and eat there. We have one in my town, and it's delicious. I love going and eating over there. And that's also another reason why I would like to own it, is because I love the product. I love what they're doing. They have been growing a lot, and they have a lot of growth potential on opening more stores. So Chipotle reported on February 6th, and they beat by 63 cents on normalized and almost 50 cents on gap. So that is about a 5% beat. That's really nice. When it comes to revenue, they reported a $2.5 billion, which is a beat of 28 millions, which is not that much, but it is pretty nice. However, when it comes to their next earning report on the 24th, they are looking to grow their EPS, and revenue is also to grow to 2.66 billion, but EPS revisions in the last in the last 90 days, it has 23 times. It has been revised down against 4 that has been revised up. So this is a really important thing to keep in mind. If they were to disappoint, will they drop? And that will be something to consider. I've been looking at a lot of different companies that a lot of people have a lot of analysts really like Lululemon and Alta Beauty, and they have reported a little bit of slowdown. They were growing as fast as, if not, they have been growing like Chipotle. In my mind, I compare those three kind of in amazing companies, and after reporting and slowdown, they drop significantly. So I'm trying to get ready for that possibility whenever they report in on the 24th. But what do you think? If you like my content so far, please subscribe, leave a like, and leave a comment. What do you think? Do you think that Chipotle will disappoint and drop, or will it continue to beat and keep going up and up and up? Do you have? Do you own it? Are you looking for the 50 to 1 split coming up? And do you have a different theory? Do you think that because of the inflation, maybe they are going to be struggling? Well, let's look at the past. In the last 10 years, Chipotle has been growing their revenue at about 10 above 10% year over year. In the last 5 years, has picked up a little bit more, growing at 12.5%. And their gross margins is 22.6%. This is low for a regular company, but remember, this is a restaurant. Restaurants, they have a lot of overhead, they have a lot of expenses. So 22, 23%, that is not bad at all. Earnings per share has been growing really steady since 2016. In the last 10 years, that's a year over year of 12%. And then the last 5 years, it has exploded to 30, almost 29% year over year growth. It's been crazy since 2020. Their profit margins right now are about averages of 8.6%, which is low, but once again, this is a restaurant. Free cash flow has been growing in the last 10 years at about 12.6%, and that includes the big free cash flow explosion that happened after 2020, which in the last 5 years, that's a 25% year over year. Free cash flow margins right now, it stand close to 10%, which is pretty nice for a restaurant. However, the free cash flow yield is at 1.73%, which might indicate that this company is overvalued. When it comes to book value, it's been growing nicely since 2017, 2016. In the last 5 years, I've grown almost 13%. But if we look at the last 10 years, that is about 5.5%. Last 5 years, the average return on equity is 29%, which is really nice. Return on assets is 10%, and return on invested capital, it's at 11%. Those are really nice numbers. When it comes to dividend, they don't pay any dividend, and that's okay because they are growing. When it comes to their long-term debt, they do have some debt, but they can pay most of their long-term debt in less than 5 years. So I'm not worried about that. When it comes to outstanding shares, they have been buying shares back in the last 5 years, less than 0.5% year over year. In the last 10 years, less than 1.3%. But I'm okay with that. I prefer if they use that money to continue to grow, open more stores, and going kind of in that direction. So I have a question for you. What do you think? Do you like this company? Do you own it? Is there something that maybe I'm missing with these numbers? Is it too good to be true? How much do you think that the inflation here in the United States is going to affect them? So I am looking to maybe jump and buy it. I would like to know what a fair value for this company will be. Write your fair value calculations down in the comments below. But I just want to let you know that I am not a financial advisor. I'm just a YouTuber. I'm doing this for educational purposes and mostly just to kind of talk through my thinking on whether to invest in a company or not. Do not make any financial decisions based on my comments and my suggestion. Well, it's not suggestion, but just my opinion. When we look at the historical multiple evaluation, um, we will be, if we were to take the average of um, uh, the average PE or uh, um, not PE, earnings per share or revenue per share or free cash flow per share, we'll be looking at a fair value of $1,752. However, because of the type of revenue and the graphics here, I'll normally, whenever I see a company that is growing consistently, that is moving like this, I normally like to, I like to focus more on the trailing 12 months. So from now on, this kind of what I will be thinking a fair value is. So a fair value for Chipotle using the multiple valuation will be somewhere around $2,480. If we use the revenue base valuation, using a 15% desired rate of return, that will be at $1,800. Using discounted earnings, we'll be looking at almost 3,200, 3,300. Of course, paying a 65 PE. If we were to pay a 60, which is a little lower, we're looking close to 3,000. If we use the payback time, we'll be looking at somewhere around $1,700 as a fair value. At this kind of free cash flow, we're looking at somewhere around 3,200 for the fair value of Chipotle. Using the owner's earnings, we're looking at 3,200. So as you can see, we have numbers all over. So if we were to use a average of all of those numbers, a fair value from my perspective, it will be $2,600 per share. If you look at the average, that will be 2,200, but I wouldn't be using these two numbers. If we were to look at 2,200, 2,600, that would be a fair value if with no margin of safety. But if we put a margin of safety of 15, which I will be okay with that, we're looking at 2,200 entry price for Chipotle, which will put it somewhere around the plateau that they had in November, December. If you think that Chipotle needs a little bit more of a margin of safety, I guess you could go to 30%, and that will put it at 1,800, which will put it back to close to their 52-week lows. But I would be happy if I could purchase it at 2,300 from these prices. So that's my opinion. I don't know what you think. If you want to play around with the valuation sheet, you can get it at Buy Me a Coffee. Please leave a comment, subscribe to the channel. Let me know if you you disagree with me. So with that said, have a nice one, and I hope to see you in the next video.